Okay, Mike, going to ask a few questions about equity release.
Go
The
ahead,
first
David.
thing is, what is it? What is equity release?
What is equity release? Okay, it's a straightforward way of releasing money from your home. In a very similar way to a mortgage, the difference is you don't have to make repayments. You can choose to make repayments if you want to, so the debt's compounded and increases. Hopefully the house price will increase as well. It's a way of releasing money to pay for existing debts, existing mortgages. It can be used to fund holidays, retirement, all manner of things.
So I have to, basically I can spend it on what I like.
Any legal purpose. It can't be used for business, but anything else, what you choose to do with it is your business.
Now, what are the lending criteria?
So you've got to be 55 years old as a minimum with a house value of 70,000 as a minimum. The way it works is the older you are, the larger percentage of the property you can borrow against, so the bigger the loan, the bigger the equity release you can take, and obviously the larger the house value, that would increase as well. That's the two criteria. Health can come into it. If you're in poor health, they're more likely to lend you more money.
How much my house is actually worth?
Okay, that's a good question. Lots of people get estate agents round. They try and do a lot of the research themselves. It can be quite an imposition getting people around to give a valuation. They're always trying to get you to buy something and what have you. It's actually quite easy to find out how much your property's worth. I'm able to speak to some local contacts, get some comparable evidence for other properties that have sold in the area. I have online tools that I can use to give you a pretty good idea about how much your property's worth. Ultimately, at the point of application, a valuation will be instructed by a third-party independent valuer who will agree or disagree with the valuation that we've given it.
Now, how much can I borrow? So I've got the value of the house, I know my outstanding mortgage, but how much of that can I borrow?
Okay, it's individual circumstances. There's a calculator on our website which you might find useful. It allows you to put in the value of the property and your age. Quite simply, the older you are, the more as a percentage or proportion of the value of the property you can borrow. So an 85-year-old could borrow a higher percentage amount of any given property than a 55-year-old.
Right. And will I still own my own home?
Yes, you will still own your own home. If you need to make some home improvements to the property, decorative work, carpets in your kitchen and bathroom, that's something you can do. If you're going to make big structural changes, you'd be expected to check with the local authority for planning permission, and in that case, the equity release company would want to know. I'm talking about large structural changes to the property. But yes, the property remains your property. Okay, the old-fashioned equity release products were called home reversions. This is something I don't advise on, and it's not something I've ever sold, basically. And in this case, you actually sell your property to a provider, and you become a tenant for life. But that's not what I do. But equity release has got this tarnish of something that involves that. It's not true anymore.
Now, I understand it's a lifetime mortgage.
That's right. Yeah, it's a lifetime mortgage.
Now, what does that mean? What are the repayments like?
Okay, so the repayments, there potentially are no actual repayments to you in your lifetime. You can add the interest, so the mortgage or the equity release debt compounds. Okay, so you don't actually have to make any payments to them. The interest rate would be, the way it works is the higher of proportion of the value of the property you borrow, the higher the interest rate, because the greater the risk to the lender. So if you take a typical equity release amount, it's a fairly low-ish percentage, say 30%, something like that, roughly, the interest rate will probably be under 3%.
Well, that sounds pretty good. And what about, can I pay the loan off early? What happens there?
So you can pay the loan off early, but most likely there'll be penalties. So if you were to move home, you can take the equity release loan with you. If you win the lottery and you want to pay that off entirely, there will be penalties. Now, how much those penalties are will depend from plan to plan. It depends how long you've had the plan. Lots of variables, basically. So it's been on an individual case-by-case basis. So if you wanted to pay the loan off completely, you could, but with a penalty. If you want to take the loan with you from one property to another, so port that loan from one property to another, you can do that normally without penalty.
So I can sell my house and buy another one?
You can.
And still
And not pay the penalty and maintain it, yes. Another popular misconception that people often have with equity release is that the loan has to be repaid in the event of the death, or the joint life second death has to be paid off immediately. That's not true. You'll often be given, it can be paid from any legal source, so it doesn't have to be paid from the sale of the property. If the children, the beneficiaries, whoever, have got money in a bank, they can pay it off themselves using those funds. Often the lenders won't interfere in the event of the death until 1 year has passed. I mean, from their point of view, they're still getting interest. So there's no immediate incentive for them to need the money back immediately. But again, that's something that people often think, that on death, they're immediately knocking on your door, asking for the keys. It's just not the case at all.
Okay, Mike, it sounds very good, but what are the alternatives? What else could a person do? What are the alternatives to equity release, and when isn't it right for someone?
Sure. Okay. Yeah. Good questions. Yeah. One or two clients I've had recently have had substantial savings. They've had money in the bank in excess of the amount of equity they wanted to release. They wanted to do the equity release and keep the savings because it was nice having the comfort zone, the buffer. But from an advice point of view, it doesn't make any sense to do equity release if you've got enough money in the bank to cover the cost of what you're looking to release anyway. The way I put it to people is you're going to definitely pay at least 3%, or roughly 3% with an equity release. You're probably not getting 3% with the money that's left in the bank. So that's one of the situations when it doesn't make any sense to do it. You can always have the equity release as a backup, or if you feel just take a smaller amount if it's really important to you to keep a buffer zone in there, but obviously look at using savings before an equity release. If you're looking to downsize, if you're thinking about potentially moving to a smaller property, then I would explore that option thoroughly first of all, because what you don't want to do is do a large equity release and then downsize. It makes more sense just to downsize and release the equity that way, from the sale of the property, from the extra capital released. So that would be another reason to delay making a decision on equity release. It's important with equity release to speak to your family, get their opinion. At the end of the day, it's potentially their inheritance. However, you shouldn't feel in any way pressured by them not to do it. The thing that's important to remember is it's your money, your equity, it's yours to do with as you choose. One option that I say to people to give the beneficiaries is to service the interest, to pay the interest if they don't want the debt to go up. And in nearly all cases, they don't want to do that. And at that point, they turn around and say, it's your money, do what you like. But it's worth speaking to other people about it as well.
Who's the ideal candidate for equity release?
It's anybody that has an equity in their property that would benefit from releasing money from it. I know it sounds like a really overly simple answer, but there's no one person. I've seen people releasing equity for lots of reasons. I've seen people who've unfortunately buried their loved ones, their close brothers and sisters and what have you, and then thought actually they want to see the look on their children's faces when they inherit money. I've seen parents help out children or grandchildren in financial difficulty, and that's taken a huge burden off their shoulders. People have used the money to have once-in-a-lifetime holidays, or to visit relatives that have moved to far-flung places of the world they'd never get a chance to see otherwise. I've seen people with very, very large, the asset-rich people, cash poor, with very large houses with very little money, and they're living on a breadline in a £1 million house. So they release some money just to make retirement easier. So there's not one answer to that.
So when does the equity release lifetime mortgage have to be repaid? Say my wife dies, do I have to repay it then?
No, it's got to be repaid on the survivor dying, or the survivor, the second person dying, or going into a nursing home. That's when it's repaid, not beforehand.